Okay, so welcome everyone to another Grow session. Today's topic's all about uncovering hidden cash in your business. If you're new to Grow, a little bit about who we are. It stands for GRWE, stands for Get Ready with Entrepreneurs. And we're a dynamic community that empowers entrepreneurs with the knowledge, connections, and opportunities that you need to start and grow your business. And we provide a supportive environment where you as an entrepreneur can access valuable insights, share ideas, and connect with like-minded individuals. Whether launching a new venture or scaling an existing business, Grow offers the tools, mentorship, and community support to help you succeed. So please do visit Grow to explore these opportunities and our upcoming events and other business resources at grwe.ca. We welcome our guest today, Jarrett Nixon, Fractional Operating Officer. Jarrett excels at helping visionary business owners refine and execute growth plans. With a background in sales, marketing, and customer service across various industries, Jarrett has a proven ability to identify core business drivers and leverage change effectively. Most recently, he served as COO and associate broker at a high-growth property management firm, where he implemented robust systems, processes, and teams to support rapid expansion. Holding a degree in communication studies and certifications, such as the EOS Integrator Masterclass, Jarrett is dedicated to building people-first businesses that deliver exceptional results. So please do check out his website to learn more about what he does. The website URL is there.
Hey everybody, thanks for joining us. Yeah, this is the presentation uncovering hidden cash in your business. Trying to help you think like a COO, and that's me, Jarrett Nixon, Fractional Chief Operating Officer. So the plan for today, I feel it's important. I know Laura gave me a very lovely introduction. Thank you for that, Laura. But I think it's important to kind of flesh out that perspective a little bit. I'm going to talk about the 3 hats entrepreneurs wear. What it means to me, thinking like a COO, it's kind of a varied role depending on the business, but we'll talk a little bit about what I mean by that. Of course, we want to make sure we're all on the same page in terms of what I mean by cash flow and cash. We're going to talk about my resource, 7 places to find cash in your business, just as a high-level overview. This presentation is kind of as a whole based on that, so won't get too deep into that one. But I'll walk through the process impact worksheet, which is sort of the worksheet portion of that resource. And again, you'll have access to that as well. Give you some kind of quick wins that you can implement, and then have links to all those resources as well, which I'll also put in the chat. So what is my perspective? As Laura mentioned, I'm the former Chief Operating Officer of a high-growth property management firm called Hope Street Real Estate. When I started with Hope Street, we had about 160 doors in Calgary, and we went to about 2,000 doors in 3 cities. So quite a lot of growth in a very short amount of time. And eventually I worked myself out of a job. Right now, I'm a fractional COO. One of my clients is Prairie's PropTech Association, which is a not-for-profit supporting property technology startups in Alberta and the Prairies more widely. And very passionate about that because there are so many really cool technology out there that can help businesses be more efficient. So my focus primarily, I talk a lot about, I really want to build purposeful, lasting organizations together with amazing people. But what that really looks like is I systemize business operations so that we can grow sustainably. As I mentioned, I've got a resource called 7 Places to Find Cash in Your Business. Laura helped and encouraged me to put together, and the process impact worksheet, which we'll talk about as well. Really just kind of narrows things down in terms of evaluating your processes within your business. So the 3 hats, and this is kind of broad, and depending on the size of the business, this could change, or the type of business this could change. So the CEO typically is responsible for vision and strategy, sort of externally focused on things like market position. The CFO typically is responsible for financial planning, reporting, capital structure, and the COO, where the Chief Operating Officer is a little bit different, is more responsible for tactical execution, process optimization, and more internally focused and sort of focused on integrating the different things. So the intersection and the common things, and this is very kind of broad because again, with different organizations, it works very differently. The roles could see some shift, but the common thread between a CFO and a COO is data. The common thread between a CEO, or the overlap, and a CFO is finance. Although as a chief operating officer, still very interested in that. And the common overlap between CEO and CO tends to be people. Again, very broad overview. CFOs obviously would still, in a larger organization, have people, but tend to kind of that. This is the way I think about the interplay. And I bring this up because what comes in the middle, and this very middle, overlap, is where most entrepreneurs actually live. They tend to have to wear all three hats, and a lot more than three hats. But this is, for entrepreneurs, we tend to sit, especially if we're a solopreneur, we tend to have to sit in the middle of that and kind of straddle all these different things. And I bring this up to talk more about the COO side of things, because that's where I've spent most of my time. So how do you think like a COO? And again, this is my perspective. I think a COO's job is to turn the big picture strategy, which we should still be involved in, into tactical day-to-day execution. Okay. So how do we do that? First step, when you're putting on your COO hat, or you have a COO, you're going to roll up your sleeves, and it's getting the work done and being side by side with your people. So that means that you do get a lot of data. It tends to, in a lot of org charts or a lot of organizational designs, there's obviously very different ways of doing it, but in some of the versions that I like to operate with, the COO tends to be closest to people. And so you're getting data in a couple of ways. You're paying attention to what people are telling you, and you're very conscious about specific metrics. Beyond kind of your typical financial statements, okay? A COO has to be very deliberate and consistent. And what I mean by that is particularly in terms of scheduling and scheduling meetings. So there's a very, each business should have a very consistent cadence of meetings, and along with that, reporting. Like routines and habits, the COO should be sort of the arbiter of that, if that makes sense, or the one driving that consistency. I think a COO has to be very willing to make changes, and always be innovating, but it doesn't have to always be a revolution. You don't have to, and in fact, I would encourage most of the time you want to iterate, okay, as opposed to being revolutionary. No, and there are times when it's important to sort of look at what you're doing and maybe toss everything out and start fresh. That's that revolution. But most of the time, really, rather than just doing the same thing the same way all the time, i.e. stagnating, it's better to have some iteration. Always look at how can I make this just incrementally better. Okay, so where does this all kind of come together? This is one of my favorite quotes, and it's one of these quotes that's sort of lost with time. Revenue is vanity, profit is sanity, but cash is king. So there is, and we'll get into this, there's a profit element in cash and cash flow, but early in my career, I was interviewing with a prominent local businessman for a sales role. I was very lucky or blessed to have an introduction, and because he wasn't hiring, and he said, "Well, I'll talk to you." We had a great conversation. He said, you know what, I totally would hire you, but it happened to be in 2008. And for those of you who've been in business long enough to remember, that's when interest rates were going up. And he literally told me this, the last third of it, that cash is king right now. And what he meant by that is that he was less willing to take a risk on hiring someone and the ramp up time and all that because interest rates are rising. So anything just cost him more. Anything that he was borrowing to do would cost him a little bit more. And that's kind of always stuck with me. So let's get into it a little bit more in terms of what I mean by cash and cash flow. So how do I define cash flow? I mean, this is not just me. And I think it's important because I come from property management. And a lot of times I would talk to clients and they would say, well, this property doesn't cash flow. And they tended to mean that, after they collected their rent and they paid all of their expenses, they didn't have any sort of cash in their jeans. And that's one definition of cash flow. But often they would forget that really in this definition of cash flow, where you have a change in cash and debt, cash plus debt over a given period of time, if you look at the long term and you look at the equity growth in that property, your debt is going down. And so you're actually creating a positive cash flow. Again, as long as you're not having to invest too much each month in that property. So really to look at cash flow, there's a time component to it. And you have to look at what that cash in the bank and your debt, how that's changing over time. And that debt could be, lines of credit, it could be investor debt, it could be, a few different things. So when I talk about cash flow, that's what I'm talking about, because it's that longer term over time. So you have, again, over a long period of time is how cash flow really works. You can have short-term fluctuations in cash. For example, a client just paid me this morning. Woohoo, right? That made my, cash flow go up. But again, it's over time. And so there's also this component of like, how long did it take those clients to pay? And so profit over time does impact cash flow, obviously positively or negatively. And cash flow also tells the story of where the profits are invested or not. And whether that is, taken out by us as the owner or invested back into the business, right? Or again, going to pay down debt. So really it also tells us, is there enough profit to grow the company and pay the owner a good salary over time? I got to, yeah. So cash flow does dictate your ability to grow or not. And again, this is whether you are, getting dilutive investment, which is debt, ultimately, or you're doing some sort of borrowing. The other thing I think about cash flow is it is the benefit of improving processes. And here's what I mean by that. When your processes get better, you're going to generate more revenue. Better marketing and sales processes bring in higher quality customers willing to pay more, right? You are going to reduce costs. You're going to save cash. And, when you streamline your operations and HR processes, or even marketing, fine-tune your marketing and fine-tune your sales processes, you eliminate waste and improve your team productivity. You can also speed up your cash inflows, cash over time. So I work with a lot of clients in property management. I've worked with some adjacent companies. Restoration companies are particularly bad for this, where that time between the job being done and you maybe have paid vendors and then you getting paid, there's multiple places where that stretches out, and the cash flow improves when you shrink those times, whether it's accounts receivable or that sort of hidden accounts receivable prior to the invoice going out. And Laura, you were mentioning that something about saving some cash. So when I talk about cash in this context, there's cash and there's cash flow. So typically, when we think about cash, it can be profit, but profit is a part of that cash flow. So cash flow as a whole adds in the aspect of the time and the time value of money. So why is it so important? And again, in my opinion, why doesn't everyone, I think I've seen many clients, I've seen many businesses that I've worked for not look closely at cash flow or process. And I think a lot of the time it's because when the market is going your way, it covers up a lot of mistakes. Okay. When people are buying, when interest rates are low, when in my case, in property management, when people are having a hard time selling and they want to rent, it's easy. It's easy to get clients. It's easy to sell. It's easy to do a lot of things, when the market's in your favor. But when we have challenging market conditions, we got to get a lot better at the fundamentals, right? And that makes the ups and the downs of the market not rock your boat quite so much. So 7 places to find cash in your business. What are the 7 places? My opinion as the ops guy, it's 4 plus 3. 4 common processes: marketing, which generates leads and promotes your brand; sales, converting prospects into customers; HR, hiring, onboarding, managing, and retaining employees; and accounting, keeping track of the money. Most businesses do those 4 things. Most businesses also have 1 to 3 operating processes. Now that might sound, for some businesses, and even some businesses I've worked for, it's like, well, no, we have 5 or we have 7. Well, really, you can probably narrow it down to 1 to 3. And it's those operating processes are what creates and delivers value to your clients, so your product or your service. And this is where I think we can find cash in the business, because if we get better at these processes, the cash flow can improve. Here's the download. I will put it in the chat later. This download is a little more explains some of the things I'm talking about right now. It does have some of the charts. Here's the next resource. And again, this is part of the same concept. I call it the process impact worksheet. And the way this works is step 1, define your core processes. So again, most businesses have those 4: marketing, sales, HR, or I prefer to call it people, and accounting. Okay. So outside of those 4, how do you deliver value to your clients? What are the 1 to 3 processes for operations? How do you describe that and briefly? Next, you want to audit that process status. So I've got some questions, and I'll show you in a minute here what those audit questions are. But then you also want to make sure that someone is accountable. And again, if you're a solopreneur, guess what? It's you. But if you've got staff, as you start to grow, this is where delegation happens, right? When you can make people accountable, or just even have these conversations about this is what matters, this is what we're measuring, our brains are wired to win the game we're playing. So if we set, here's what the score is, here's how we're going to keep score, even for ourselves, it makes a big difference. And then part of the sheet is also assessing the impact on cash flow. So trying to figure out, like, okay, if I make a small change, is it going to make a big change in cash flow? So there's some questions in there as well. So I'm just going to switch to that. We're going to run through this real quick. Switch my screen here. Bear with me. Okay. Now got it on a different screen, so hopefully that works okay. So this is what the process impacts worksheet looks like. And when you get to it, you can it's got a tab that will allow you to, or it's got a how to use this sheet. But the first thing you need to do when you get to this is make a copy of it. And there we go. So then we want to define our processes. So as I mentioned, so the way this sheet works, you can just name the process very simply. A couple of examples down below here, like a rental property management core processes might include leasing, maintenance, and property management. Because that's my experience, I'm just going to add one here. We'll add two. Okay. Then I'm going to go to the next tab. And we're going to use this to essentially evaluate the state of those processes. So really just ask yourself and rank from 1 to 10. Is this process well documented and easy to follow? And you might be, let's say, an 8. Okay. Is this process consistently executed every time? How difficult is this process? Well, we're going to say maybe it's quite difficult. How accurately is this process typically done? Well, they're pretty accurate. How long does it take? Well, it takes really long, so I'm going to put it as a 1. And how does this process affect employee morale? So that maybe it's a 1 if it takes a really long time. And then it just gives you a score. And this is just a thought exercise just to help you work through how well that process is working. And you can do that for any of these. So we've got marketing and sales and HR and accounting and your operations in the middle. Next thing you're going to want to do is really look at the accountability piece. So what is the one key metric that indicates success in leasing? So there's a couple different options you might use here. My favorite is, I call it DOM, just days on market. So, and actually I'm going to call it average. Okay, just as an example. And just pick one. And there are several good indicators, but pick at least one, right? So another one in leasing might be, the ratio of the desired rent to the actual, right? So, or it might be your vacancy rate. It might be as simple as that. But pick one and start with that. Then think about what is that metric now, right? So maybe your metric is maybe your 30 days. Okay. What improvement is achievable? Maybe we can get that down by 14 days. How long will it take to make the improvement? Let's say 2 months. Okay. And who's responsible? Well, it's me, so it's always me. Okay. And really think about like what that impact is. If you can, put a dollar value to this. But with all of these exercises, you're probably going to want to talk to your team if you have a team. Lastly, we have execution. And again, all these three sort of tabs together are going to come together to help you kind of think about where you want to focus. Okay. And it might be marketing or sales or HR or accounting, but again, I'm the ops guy, so we're talking about operations. So when this process is executed perfectly, do I negotiate better prices? In leasing, absolutely. Do I sell more of what I sell? Well, yeah. In property management, you're essentially selling someone else's product. Does my team save time? Yeah, if I do it right. Do input costs decrease without affecting quality? That's a maybe in this one. I would probably say if you're more efficient, it's probably going to decrease your input costs. Are operating expenses reduced? Maybe, maybe not. So operating expenses being, more the like could be the cost of people. It could be more those not just what keeps the lights on, if that makes sense. So do project completion or inventory days improve? So can I and we were just talking about, yes, I can complete a project more quickly if the project is leasing. So if I do this better, 100% that would. Is payment collected faster? Yes. In leasing or in property management, you don't get paid until you have somebody in the property. So if I go from 30 days to 14 days, that's a material improvement in what my process is, or in what my cash flow would be. And our risks like regulatory compliance or insurance risks reduced 100%. If I have a good leasing process, and again, apply this to whatever it is you do, apply it to your world. But if part of the measure of what makes a good leasing process is that I am doing things like screening and that I am letting people into the properties in a safe and risk averse way, I guess you could say. So that's the process impact worksheet. Just gonna flip back over here.
Jarrett, before you leave this though, we just
Yeah,
have a question.
sure.
Um, how is the matrix inputs weighted? Can you expand on that?
Back to this one.
Yeah.
It is, let me think about that. That's a great question. What I did is that the top ones are more heavily weighted. I had notes about this. I'll have to go back to it. But each one, like if you start with, so for example, if your process is well documented, that's much more heavily weighted because that generally is going to take you a third of the way, right? It's going to make a much bigger difference than say whether you're it's going to make a difference in whether it's consistently executed every time, right? Especially if you have staff, right? If you have staff and you don't have something documented, you're going to see drift, right? Um, the difficulty again maybe is not going to be impacted by your documentation, but it's going to highlight those things as you're documenting, whether it's for yourself or and you're teaching someone else or your staff. It's going to highlight those things of how difficult it is, and then things like accuracy, how long it takes, and the morale. I mean, those are again kind of flow from the top questions. Does that make sense? So basically, this first question is weighted 3x. Um, the the next two are weighted 2x, and then these ones are 1x.
That's great. Thanks, Jarrett.
You're welcome. Thank you for jumping in because I can't see the questions the way I have things laid out. So,
That's okay.
okay, there we go. So back to here. Okay, so there's an opportunity to download. Again, I'll put that in the chat once I'm kind of through the slide deck. So what do we do with all that? Here's some quick wins for you. As an entrepreneur, you're wearing all three hats. Be intentional about which one you're wearing. The best way to do that, in my opinion, is to block time in your calendar. I had somebody ask, one of my coaches asked me, are you governed every day by your inbox or your calendar? And I would suggest the calendar is going to be more effective. I very much have found that to be the case. So for example, book half an hour for sales calls, whether it's every day or every week or whatever you need to accomplish your goals. Book time for accounting, book time for marketing, book time for, people, if that's part of your thing. If you have more staff, you might spend more time meeting with those people. Very, very simply, I mean, this is almost goes without saying, but I think it's important to say it. The best way to make more money is to sell more, spend less, then optimize. Okay. A big part Laura knows this person, someone in my network says nothing happens until somebody makes a sale, right? The first thing you should be doing is selling more. I'm not going to pretend that optimizing your operations is going to have more of an impact than literally getting signed contracts. But we get to this point where that's almost too simple, right? If we're selling and we're spending less and cutting, like where do we cut without kind of hamstringing ourselves? That's where the optimization comes in. And Laura was talking about this earlier, and jump in anytime with your story, but ask the expert. If you're struggling with something, find somebody, find a lawyer, find an ops person, find a marketer that can help you with those different hats that you have to wear. Again, getting into the what I do and the operations side, number one thing is to start documenting what you're doing. And here's a couple of ways you can do that. Start at the very high level. Like you noticed, I didn't talk about like getting really into the weeds on exactly how you do every single thing. Start at a very overall high, 1,000 foot, 30,000 foot view. And then just ask why. Why do I do it this way? Why do you do it this way to your staff, right? Why is this important? And because we get into these habits and sometimes they become bad habits as the world around us changes. Iterate immediately. Again, make those constant changes, iterate or stagnate. And as you get into the more detailed stuff, I really recommend this tool. It's called Scribe How. Essentially what you can do is, and this works most effectively for things you do on your computer. If you're doing things in the field, not as great, but essentially what it does is it records your screen as you go through a process and it transcribes immediately. So it basically gives you a process in about 5 minutes after you've gone through the process. It's got screenshots and screen captures and clicks and everything like that. And then it also gives you a transcription, which is fantastic. You just have to tweak it a little bit. And then the last thing, again, from an operations standpoint, is inventory your technology. We're just inundated with all these different tools. I don't know about you, but I love trying out different things, and I have to go through every so often and kind of cull, whether it's paid or free, because your time is worth a lot of money as well. Just about through. I know I'm maybe a little bit over time, but pay attention to cash flow over time. This should be a report. If you're feeling stressed about money and about the ability, and cash flow is kind of ultimately the measure is, can you pay your bills? Pay attention to it over time. I recommend to my clients, you should be reviewing a cash flow projection every week. Better processes lead to better cash flow. Better cash or better profit over time makes for better cash flow. And faster cash conversion makes better cash flow, right? The faster you can get those bills out the door and then collect those invoices or collect before you start work, things like that really have a big impact on your cash flow. Oh, I don't know why the top one ended up last, but growth requires cash flow. Whether you're borrowing, whether you're getting investment, we've seen over the last several years, several of these like really hyped companies that I never understood why they garnered so much investment. There was just no way for them to generate enough revenue, enough cash flow to sustain some of the valuations that we've seen. And of course, several of these have collapsed over the years. So again, that's kind of how I think about it. Again, I'll pop these in the chat. My contact info, you can book a call. Okay,